Hello, this is Kirill from forexbot.com and welcome to this 23rd tutorial on algorithmic trading for beginners. And I really hope that you're as excited about today's tutorial as I am, because today is the day that we're finally going to start working on our very own algorithmic trading system. So what does any algorithmic trading system start with? Any algorithmic trading system starts with an idea that we can put in the core of our trading strategy, an idea that we will build all of our rules around. And that idea can be anything. And most of the time, it will be a dependency that we observe on the market, some sort of pattern or something that we can we think that we can exploit. How do you come up with an idea like that? Well, I recommend using recalling what we talked about in the previous tutorial when we discussed rule-based decisions in algorithmic trading, and I'll just bring up the slide from there. And that time we talked about three types of rules that we will be looking to incorporate in our system, and those are price rules, time-based rules, and indicator-based rules. So we can use this diagram as a guideline. We look at price, time, and indicators to try to find some sort of pattern in the market. So here you see the British pound dollar chart and some highlights that I've already made. And they might not make sense right away, but watch how this changes in less than a minute as I just adjust the chart a little bit. So first of all, we're going to change the chart to a line graph. And then I'm going to go into properties and I'm going to add the period separés just like we did in the previous tutorial. So now, as you can see, it's starting to make a bit more sense. The lines are always connecting the open price of the day with a price somewhere in the market, which we'll talk about just now. And then some other arrows show which way the trader should enter the market. Blue means buy, red means sell. So what am I doing here? I looked at the British pound dollar and actually let's rewind a little bit. What I was trying to do was I wanted to come up with a trading system that we would program in this series of tutorials, but I didn't want it to be just a generic indicator-based system or something that we would code just for the sake of training and practicing and upping up our programming skills. I wanted to actually make it interesting by actually finding a pattern in the market and something that we can exploit and something that will give our system a chance so that it can actually be profitable and it can bring us money in the end, and that way it'll be more interesting and more fun to create the code for the system. So what I was doing, I was looking at the British pound dollar chart, and I noticed the dependency, something that we actually spoke a little bit about in the previous tutorial, that usually the day here starts pretty flat, and then there's a big movement somewhere in the middle of the day. And upon further investigation, this is what I found. I found that often the British pound will, at the start of the day, it'll move in one direction, and then around 9 o'clock, or maybe 8, 9, 10, 11 o'clock, it will actually jump in the opposite direction. So as you can see here, the red line is showing that the British pound was going down from the start of the day, from 00 to here it's 13 o'clock, and then it jumped back up. Here again, it's going down from 00 and it's going all the way to 12, and then it's jumping back up. Here we can see the opposite happening. The British pound dollar started at 1.7129, went up to 1.7136, and then it jumped or tumbled all the way back down. Here's another one. It started somewhere around 1.7120. Went up, and then at 9 o'clock it tumbled down. And so this dependency can be observed quite often. Sometimes you can't observe it, like for example here on the 16th of July 2014, it's just going flat pretty much no big movements, and the biggest span here is about 20 pips. Can't really make a profit of that on British pound dollar H1 chart or 1 hour chart. Here what you can see is that it's just going down, just plain down, and that's why there's no bounce back up, and that's why I put the X's here, meaning that can't really trade, or if we trade, we won't make a profit on these days if we try to trade this pattern that we've noticed. However, here yesterday on the 18th of July 2014, what happened was it went up, and then the British pound dollar went up, and around 10 o'clock it tumbled all the way down. And so that's the dependency I noticed, and that's what we're going to try to put at the core of our system and build a whole trading strategy around, and of course automate it in the process. Let's have a look. Let's go back a bit and have a look if we can observe the same relationship back in at the start of the year, meaning just to make sure that it's not a recent trend, it's not a recent thing that's happening, that it's actually pretty consistent, because any trading strategy, it can't survive forever, but we would prefer it to be viable for at least 2, 3, 4 months, and until we have to maybe adjust it a little bit. So looking back at February this year, what we can see is that we can actually observe this pattern as well. Here on the 24th of February, the British pound dollar started low, went up, and then tumbled down. And what time did that happen? It happened at 10 o'clock. On this day, I put a cross here because it did happen, but it happened around 3 o'clock. Which is pretty late. Like, we have to choose a time. We have to choose a time when we're going to be expecting this to happen. And from what we've seen so far, it's probably going to be 9 or 10 o'clock. So here, we probably wouldn't have made money. On this one, on the 26th of February, you can see it started low, went up, and tumbled down at 9 o'clock. Here, it started high, went down, and then jumped up at 10 o'clock. Here it's kind of generally going up. However, well, there is a jump down at 10 o'clock. I just didn't highlight everything around here, just a few. Here you can also see it started low, went high, tumbled down at 9 o'clock. So this whole pattern, or this whole behavior in the market is happening around 9 o'clock. And what does that mean? Well, it means that 9 o'clock on this server time is actually when the European session starts, or somewhere around there. So during the Asian session, this British pound dollar, it's pretty calm, or it's going in one direction, and then like here, it's not calm, of course, but it's going in one direction. But then when the European session starts, it makes a rapid movement in the opposite direction, and so that's how it can be explained from like a market point of view, why it could be happening. And as you can see, we're not observing this pattern every time. There are exceptions, and sometimes it happens later, sometimes it happens earlier. But a lot of the time it does happen at 9 or 10 o'clock. So, and that's the beauty of Forex. You don't have to actually observe something or find something, a pattern that happens every single time. Even if it happens in 60 or 70% of the time, then you can still make a profit out of it by putting the right decision-based rules around it, and putting a good trading, generally good trading strategy around it. So generally speaking, this is a good, looks like a good pattern for us to trade. So let's bring up this presentation again, and what have we discussed so far? We've ticked the price because we're looking at the start of the day price and price at 9 or 10 o'clock, and we've ticked the time, and because we're looking at a fixed time, we're expecting this pattern to happen at exactly 9 o'clock, and so we are looking at time. We haven't looked at indicators yet, so how about we do that? How about we see if we can improve the system a little bit by using an indicator? So we'll quickly add a moving average. It's 100 periods simple moving average by using the close price. And generally what you would do is you trade a moving average, you'd use a moving average as a filter. And if you're above the moving average, if your price is above the moving average like here, then you would trade, you'd do buy orders, you trade upwards because it's that indicates that it's an upward trend. If your price is below the moving average, like over here, you would generally sell because that indicates the price being below the moving average indicates that it's a downward trend, and obviously you'd rather sell in a downward trend. However, let's see what's happening in our particular situation. So in this system that we're outlining here, what we can see is that these blue arrows are below the moving average, and the red ones, except for this one, are either very close to the moving average or are above. And what does that mean to us? That means that we're actually doing the opposite of what was prescribed. So the price here is generally below the moving average, but we are buying. And that means that we're actually going against the trade, and looks like it, by the looks of it, if we look back here, we can see that the price is going down generally, but at every one of these blue arrows is a retracement. And so to me that says that probably during the European session, the British pound dollar currency pair experience at the open of that session experiences a retracement within the trend. And without even knowing that, what we've come up with, this trading strategy we've come up with, is actually based on trading that retracement. So it is legitimate that we're trading buy orders, we're creating buy orders below the moving average because we want to catch this retracement movement that we've observed. And so that's basically it. That's how our strategies played out, and it's ticked all three of these boxes: price, time, and indicators. And that's exactly what we're going to be working on in the future, in the next couple of tutorials. In the next one, we're going to create a blueprint for this system, just so that our coding is then much simpler. And then in the tutorial after that, we're actually going to start coding it. And you'll see how, because we've done all of this groundwork already, and our system is shaping up pretty nicely, and it's pretty straightforward and quite simple, you'll see how that our coding efforts will be very little, and it'll be very easy to program this system. So that's that for today, and hope you found this tutorial interesting, and I hope to see you on the next tutorial. Until then, happy coding.